This segment will explore the performance of Indian equity markets during the trading week of December 1st to 5th, 2025. The market saw significant volatility throughout the week but ultimately ended higher on Fridays after RBI's rate cut announcement. We'll delve into the key drivers of this week's market movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market witnessed a volatile but positive week. The benchmark Sensex closed at 85,712.37, a marginal weekly gain of 0.08%, recovering from earlier losses. The Nifty 50 also finished the week higher, closing at 26,186.45, reflecting a 0.04% weekly gain. This performance indicates a cautious optimism prevailed with strong buying on Friday, led by interest rate sensitive stocks after RBI cut the repo rate by 25 basis points. The broader market, however, remained weak, with mid-cap index slipping 0.7% and small caps falling 1.8% for the week, suggesting selective participation. Several critical factors influenced investor sentiment this past week. The most significant event was the RBI decision on Friday to cut the repo rate by 25 basis points, a 3-year low of 5.25%, which significantly boosted domestic market sentiment. The US economy also showed strength, with the economic optimism index climbing with in December, providing a constructive global backdrop. The S&P 500 index hitting a record high in the US further boosted global and domestic market sentiment. However, FIIs remain net sellers, offloading equities with a weekly net outflow of 8,368.8 CR. In the equity segment, this FII selling was partially absorbed by continued strong support from DIIs. The Indian rupee remained under pressure, slipping to close at 89.94 against the dollar. Sectoral performance reflected the impact of the RBI's rate cut, with interest rate sensitive stocks leading the rally on Friday. The Nifty IT index was the top performer, rising 1.41% as it extended gains for the third consecutive session, buoyed by rate cut hopes in the US. Financial and banks were also among top gainers for the day, with the Shriram Finance, SBI, Bajaj Finserv, and HDFC Bank leading the charge. In contrast, some sectors like FMCG faced pressure, with Hindustan Unilever a top loser due to demerger record date. Indigo also slipped due to flight disruptions. This reflects a rotation towards financials IT, with other sectors faced stock specific pressure. From a technical standpoint, the market exhibited a strong positive bias after RBI's rate cut. The Nifty 50 closed above its 20-day and 50-day moving averages, a bullish signal. Immediate support is seen around 26,050, while resistance is expected at 26,300. A decisive break above this level could open the door for further gains towards 26,500. Experts noted that while the domestic policy is supporting the market, global headwinds and FII outflows should be monitored closely. The overall sentiment remained cautiously positive, with analysts suggesting focusing on fundamentally strong stocks in the rate sensitive sectors. This analysis is based on information available as of December 5th, 2025, and market conditions are subject to rapid change. Investors are advised to consult with a financial advisor before making any financial decision. Thank you for joining us for this week's in-depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements. Thank you.